Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. This weekend it was really lots of hard work to do. It's just because it's so many important information that we've got, and really the big bulk of it demands deep analysis, so some explanation, because as we have seen from the comments that not everybody understands what we mean with the loss of the strategic management in the United States and how the possible default might be and how it could help with the restoring of the strategic management and why actually the United States needs to restore the strategic management and so on. So it's lots of questions around it, and we have clearly seen that it demands some explanation. And we think that we have prepared extremely interesting report when we have shown first what actually market expects from the current saga around debt sale, how they treat it, what they intend to do. We also have taken a look at the statistics, what have happened in the previous pre-default conditions 2011, when even the S&P agency has decreased credit rating in the United States for one step, what has happened with the stock market, with the gold and so on. So in two words speaking, gold was actually among the best beneficiaries in all this turmoil, and that's obvious. In the second part of the report, we have taken a look, as we have promised yesterday in our Forex report, we have taken a look at the last subject of this week, is speeches of the Jerome Powell together with Ben Bernanke and Janet Yellen. At first glance, they were talking absolutely contradictory moments. So if Janet Yellen has talked about the more consolidation of the banking system, Jerome Powell was talking about that the banking system is strong and so on. So it was some kind of the contradiction, but actually no contradiction at all. And at first glance, it could seem were very curious speeches, especially in an environment of the default and in an environment of the problems in the banking sector. But as more facts we're getting and as we're closer to we're going to the X day, we get more and more facts that led us to think and suggest that this is controlled process. As a banking crisis, as a default process and pre-default process, debt selling discussion, all this stuff is a controlled and managed process and intended process that serve to one proposition, is to restore strategic control in the United States, strategic management. There are a lot of byproducts of this, of course, exist. So no doubts, this is really very sophisticated moment. It has relation to financial markets, to the foreign affairs, to the social sphere, and so on. But we're just focusing on a major purpose. What's most important for the United States? It's to hold and keep the global domination, to hold and enhance the global financial system, and to keep the control of the global financial markets. So, and we have taken a look from these points of view on the overall processes that we have, and we explain in detail what is the strategic management, why the United States is losing it, and how default actually could be used to resolve this problem, and how the banking crisis is relating to all this stuff. Hopefully you will get the enjoy to read it. It's not really very big. So now about the technical stuff. Based on the actually recent polls that have been made by the Bloomberg and the results of it, we suggest that market society undervalue the chances of the default. We're not arguing that probably its problem will be resolved and so on, but we think that the chance of this is a bit specific default issue compared to all other debt sale discussion that has happened previously. And we think that probability for default is greater, and we think that market is actually underpricing the probability across the board. So stock market is not dropping is not enough, while the gold market is not rising enough. So it means that, as you could see on the chart, that we were more or less correct in our suggestion that until we stand far from the dead point, gold will be under pressure because everybody starts to accumulate cash, preparing for possible difficulties, trying to plug the holes in the margins and for other purposes, and that will make impact on all markets across the board. And this gold market is not an exception, as you can see. This gold market also is dropping. But as we start coming closer to the default point, and as it more evident will become that, well, default actually starts become feasible, we think that the pressure on the gold will become weaker and demand for the gold will start rising. And that's why we're not, maybe we will see some pressure, some stagnation on the gold within the 1-2 weeks. But we don't expect a real big collapse on the gold market. And from that standpoint, despite what we have technically bearish trends and bearish performance here, well, we think that I'm not excluding that market maybe even stay right in this area. So, but next week we will start technically from the bounce up from here. On technically, we have the bearish context. We have the bearish reversal swing here, as you can see. So we discussed already in the weekly on Friday. And potentially it keeps chances for another leg down. So after some pullback, we could get some kind of ABCD pattern. That could happen. But this action hardly will be too extended. So maybe it will be around 1920 area. So next week we'll start from the upside reaction. So additionally, we have the bullish directional pattern. This is Napoli stretch. This is a combination of the fib level and daily average sold. It suggests some pullback. So if even we will get next downside leg, it will start only after some pullback will happen. And our task is to estimate the target of this possible pullback. Additionally, scalp traders, as we said on Friday, you could consider taking a long position. Maybe somebody you already have taken the long position. For the bears, it's still nothing to do because you have to wait when the pullback will be over. And supposedly, the first area that bears could consider, it might be around 1995 and the 1000 level. Because here we have confidence, here we have obviously natural support resistance area. So previously was resistance, breakout, it's become support, breakout, and it's become again resistance. That's potentially the area where the pullback might be over. So the first level that bears could keep an eye on. But it's still a long way until market will reach it. Downside target, as I said, it might be around 1922. So this is kind of our XOP that has not been reached. But this is a bit more extended target, and it's not the time yet to speak about it. So, as you could see on the 4-hour time frame chart, the drop from this top around 2022 brings clear signs of the thrusting action. So this is the thrust that is suitable for Napoli patterns. And in fact, we have a kind of the brand body cell. So we have thrust and a pullback, right? So this tells us that probably we should get here retracement somewhere to the 618 support area before we will get next upper direction to 20,000 area. Why we suggest that it should be second leg? It's just because on the daily chart, as you can see, we have a kind of the engulfing, and engulfing, at least following the probabilities, in most cases take the shape of the ABCD performance. It has the second leg, two-leg structure. We are just following the probabilities in this subject. It means that theoretically the overall shape of the retracement might be looking like on the hourly chart, something of this sort. So now we have the ABCD completion of the XOP, brand body stand in place. In the beginning of the week, right on Monday, we could get drop somewhere to the 1965, which completes the brand body. This is the minimum target of the bread and butter, and then we could get an extension. So ABCD target points on the 1996, which is perfectly agrees, as you could see, with this level. It's 1996 accurately creates the agreement. That's another reason why bears could consider this resistance area potential entering on the short side. So that's approximately the technical trading plan for the Monday, Tuesday maybe that we will be watching for in the gold market.